for taking the time out and speaking to us here on ET Now. When the last time when we spoke, which was about 2-3 weeks back, you suggested sales worth around 1.2 lakh crore just this festive season on e-commerce platforms. Now, does this recent GST rate rationalization exercise further revise that figure upwards?
So I think the exact figure we had shared last time around was around 150,000 crores, and we had already baked in some positive impact of GST in that estimation. So we do expect, of course, after the clarity that we have across different product categories, there'll be a slight increase for that, and now we believe it will sit closer to 120,000 crores than 115,000 crores. But the impact was already baked in, so the broad range remains the same. But 120,000 crores should also be a pretty significant impact and growth from last time around, like we spoke.
Absolutely, Kushal. That's significant also because a larger chunk of these sales have been going to quick commerce platforms owing to faster delivery timelines. But let's also talk about the categories that you expect to outperform as far as these festive sales are concerned.
Yeah, so I think if we look at the e-commerce mix of categories, right? So the big categories are mobiles, appliances, and then there's a mix of other categories where you have a lot of small ticket product items like beauty, personal care, fashion, home decor, so on and so forth. But mobile, appliances, and fashion, they would be contributing easily 70 to 75% of the total festive sale universe on e-commerce, and I think they are the key drivers of growth in there. Now, of these, I think appliances are the ones which will benefit a lot more because of the GST impact, because they're for the large appliances, there's a clear rate slash that has happened, which will bring down the consumer prices even further. And we also saw appliances didn't have a very great summer cycle this season. So there's also a lot of stock that's out there which needs to be released before the end of the year. So appliances will get that GST boost for sure. Mobile GST rates have remained same, so not major change expected in case of mobiles. But of course, I think the festive period brings new launches, brings the discounts, so they'll continue to grow at the expected pace we had projected before. Fashion will also be a key beneficiary, especially below the 2,500 priced fashion, because I think that's where the GST rates have again been reduced. So we may see some impact there, but the thing is that in large ticket categories like appliances, the impact is a lot more, because a 10% decrease in a 50,000 rupees appliances gives consumer a direct 5,000 rupee improvement, right, in the price point. In case of course, when you're looking at fashion, beauty, grocery, so on and so forth, because the ticket size is low, the impact of 10-12% is relatively low, right? So appliances will be the most significant beneficiary of this GST bid. I think others, of course, will also be impacted in a positive way in their relative spans.
All right. So essentially, it's the affordable category that's likely to see a boost. And of course, within affordable category, you're banking big on consumer durables, electronics, and of course, fashion. Now, Kushal, let me also ask you about the fact that given then that this quarter is expected to clock in bazooka sales, what about the next 2 quarters? And for how long will companies sort of face a lull right after these festive sales? Do you expect that lull to kick in?
So our sense is that, of course, I think some of this demand curve upside will start happening towards the end of September. So there'll be an uptick in Jazz quarter, which you'll see, and then this will again flow through in OND as well, because you have multiple rounds of festive periods allocated in that period too. So at least July, August, September, and October, November, December, those 2 quarters should definitely be an uptick in terms of the festive period and the GST impact is concerned. Our sense is that, of course, that uplift will get corrected at some point, probably around the JFM AMJ period. It's hard to comment right now as to what will be that exact period when it does happen, but I think expectation is that maybe around JFM there will be some correction in the growth rate, which we may just see in an accelerated way in the next 2 quarters. That's how we see the trend likely panning out.
All right. So at least for this year, things are looking hunky-dory and all looking very, very bullish as far as e-commerce sales and, of course, these company and the demand perspective is concerned. But Kushal, while these discounts coupled with GST easing off could trigger price cuts, but how soon before companies actually start increasing their prices again?
See, typically, the GST thing is expected to be a more permanent thing. It's not a short-term move just for the festive season. So it's a permanent thing, and it will keep the prices low for at least for a few years now. So there's a permanent decline in prices that expected, at least for the end consumer, which will get the demand up. From a company perspective, see, typically this is a festive season cycle that they follow. So the prices go down in this September to December time frame, and then they start going up again in JFM. So that's a typical trend that they follow in any kind of festive season or any kind of year. There's a festive price decline followed by a not a price hike but a price neutralization that happens later. I think the same trend will follow this year as well, but the GST impact will be more permanent.
All right, so GST impact is going to be more permanent, but things are looking rather different for the auto sector. And of course, auto experts have commented on the fact that companies could look at boosting prices, but at least in the near term, that's not happening given the fact that the GST bazooka is going to give a spurt to demand. But let's also talk about the quick commerce segment, Kushal, because quick commerce companies in recent times have increased their delivery fees. There's been surge pricing as well, and now government is levying 18% GST, so no change on that. Does that indicate a slump at all for quick commerce companies versus e-commerce companies, given the fact that customers are still hooked to these quick commerce platforms? And perhaps the understanding is that a price change will not impact behavior much. Would you agree? What is your assessment of how quick commerce companies are going to perform?
So, firstly, I think some of the GST simplification has also happened in categories such as grocery, beauty, home products, right? So, that part will benefit quick commerce and e-commerce equally. So, there'll be that level of price rationalization which will benefit that channel. Having said that, like you, I agree with the fact that quick commerce actually runs on a very strong habit formation hook that has developed over the last 2 to 3 years, and there is a very sticky user behavior that has been created in the quick commerce space, particularly in the larger city and certain micro markets, which is there to stay. So at least that consumer is very, very convenience focused. They want the products delivered in a certain time frame, and they, to be honest, care less about minimal price increases in the search fee or handling fee or other things here and there, right? So if, and that has been happening for a while now, so if it had to impact the quick commerce sales materially, it would have already happened, right? But we still continue to see quick commerce growing at 150% year on year, and that continues to happen. So I don't think smallish price enhancements in quick commerce will affect the consumer behavior in any material way, because I think it's built on convenience, it's built on a more long-term habit formation which is established now. So it will continue to be the way it has been, at least in the last few months.
So, Kushal, when we speak about quick commerce companies versus e-commerce companies, of course, quick commerce companies offer ease of delivery, and faster delivery timelines have ensured that quick commerce companies are able to compete with e-commerce companies. But how do you think this festive season is going to pan out? Is this going to be more about e-commerce sales exceeding quick commerce sales? Because in the recent past 2 years or so that we have seen, we have noted that these festive days and event-led days specifically are big days for quick commerce companies for garnering sales. But is this going to be any difference this year?
So, see, e-commerce put together, including quick commerce and other business models such as horizontals, verticals, value commerce, is still only 7% of India's total retail consumption, right? So there's a huge headroom for the overall e-commerce pie, including multiple models to grow ahead, right? So they are not at a stage where the growth of one model is severely impacting the growth of another model. They are still, let's say, 7% of the overall market. So different models can coexist and grow at a fast enough space, right? So that continues to be the trend. I think, having said that, of course, quick commerce is seeing an accelerated adoption versus the rest of e-commerce in India. That's also a fact. So while quick commerce was, let's say, almost 5% of total festive volumes last year, it is expected to be around 10% of total e-commerce festive volumes this year, right? So it will of course gaining share in the overall e-commerce pie, but I think still the non-quick commerce is 90% of the total festive sales, right? So the majority of market when consumers are looking to go for mobiles, appliances, electronics, fashion, that still sits in that 90%, and that will continue to be the case. Of course, I think a lot of the new use cases such as gifting, impulse buying will be served more by quick commerce, and that continues to happen through. But it's still kind of a 10-90 split between quick and rest of e-com is what we are projecting for this festive year versus a 5-95 kind of a split last year.
All right. So quick commerce companies will continue to expand their share despite the fact that e-commerce companies have now gotten a big bumper bazooka from the government. One final question, Kushal, before we let you go in. This is essentially about overall growth expectations for the e-commerce category, not just in terms of festive sales, but where do you expect e-commerce companies to end this fiscal?
Yeah, so I think this calendar year is what we have projected, right? So to give you some sense, I think last calendar year e-commerce put together was around 580,000 crores of GMV, and we are projecting a net of a 20% growth this year, given the festive boom that will come through, and take the e-commerce overall GMV to around 700,000 crores at an overall level, putting together all the platforms in there. This compared to the last year's year-on-year growth is 2x, almost 2x. So last year, quick e-commerce as a whole grew at almost 11%, and now we are saying almost 20%. So definitely see sector in a very positive light now. And 2x of last year growth, even at a higher base, is a very positive signal for overall digital consumption.
All right. So that kind of growth that you're expecting for e-commerce overall, it's going to be a good year versus quick commerce specifically. On that note, Kushal, thanks very much for taking the time out and speaking to us here on ET Now. Well, time for us to slip into a very short break, but lots more coming up on the other side. Well, switching tracks now and getting some news from Apple. Well, Apple's annual sales in India have hit nearly a record of $9 billion in the last fiscal. That's essentially what sources are telling ET Now. And that's a big signal of growing consumer demand for the company's flagship devices. This even as the company is firming up its retail footprint in the country. In fact, Apple just added 2 stores recently in the cities of Bengaluru and Pune just in the past couple of days. And the company is planning to launch 2 new outlets in Noida early next year is what sources suggest, and there's another one that could come up in Navi Mumbai. Remember, this is coming in at a time when the company is dealing with stagnant mobile device sales around the world. India, even though represents still a fraction of its overall business, the company continues with its push in the country. In fact, India is expected to also become a key market for Apple in the next couple of years as it continues with its supply chain shifts towards India, whether it's related to its manufacturing strategy or its retail strategy. Well, news also coming in from the world of AI. The productivity, the impact of AI is overstated and may not be more than just 30%. And that's what Zoho Corp's recently appointed CEO Shailesh Dave believes. Dave, who recently replaced Sridhar Vembu as Zoho Corp CEO, even claimed in a candid interaction with ET Now that tech firms overhired during the COVID-19 pandemic and are now blaming the recent spate of layoffs on AI. Here's a slice of that exclusive conversation that my colleague Jude Sanith had with the CEOs of Zoho Company and, of course, the company's enterprise division Manage Engine.
But with this AI coming in, so the more important thing would be to kind of look at the hype, look at what is valuable, look at what is effective, and then apply the technology prowess and then bring value to the customer, right?
Absolutely.
So that change is happening now. So without falling to the hype, understanding how we can provide value to the customer, that I think will become a very good differentiator going forward, apart from knowing the domain or the problem that the customer is facing, knowing that well would be the other one.
Complain about the lack of availability of talent. It is there everywhere. You just have to go where the talent is. It doesn't apply just for AI or software or SaaS. They are waiting to be tapped. They are not able to move to Chennai. They are not able to move to any tier 1 city. But if you are willing to go to where they are, build that ecosystem, build the structure and setup, you just don't have to complain. There are plenty of talent available. So that's what we have done, not just in India, even in regions like Latin America or Southeast Asia. Apply the same model. So go to smaller towns, tier 2, tier 3 cities, where people are happy working there with the same talent. So because today it is a flat playground for everybody, right? So especially with what you have with ChatGPT and all, right? So everybody is equally talented. You just have to take opportunity to.
So I think as a part of COVID, during the COVID times 21, 22, 23, there have been a lot more hires than what the industry can actually have, a lot more companies than what the industry actually can kind of sustain. So some of that is being let go, but then I believe, so you are putting a paint around it, calling it AI. And so we believe it will help you like 20-30%. It's not like the 10x that a lot of people claim, but I believe these are early days. But what we are doing at Zoho Corpus, see, one thing that will never change, whether AI is there or not, this interaction with the customer or the expectation for the customer to deal with a human being at the other end, or the customer empathy. So all these are some factors that will remain, irrespective of what technology you have.
But surely the high...
Staying with some more news from the United States, well, Donald Trump has pressed America's top tech CEOs to spell out their investment commitments at a White House dinner last evening. Mark Zuckerberg and Tim Cook committed $600 billion each, while Google cited $250 billion. Bill Gates touted health innovations, while Elon Musk was notably absent. Let's take a look at what these conversations look like.
You know, all of the companies here are just making huge investments in the country in order to build out data centers and infrastructure to power the next wave of innovation. So it's, you know, we don't often get together as the CEOs of the different companies, but it's good to see everyone.
How much are you spending, would you say, over the next few years?
Oh, gosh. I mean, I think it's probably going to be something like, I don't know, at least $600 billion through 28 in the U.S. Yeah.
It's a lot.
No, it's significant.
We are all different in some ways, but we all believe in the power of technology to improve people's lives, and that is the thing that binds us all together.
And Tim, how much money will Apple be investing in the United States? Because I know it's a very lot, and it's, you know, you were elsewhere, and now you're really coming home in a big way. How much money will you be investing?
$600 billion.
$600 billion. All right. It's a lot of jobs.
We're very proud to do it.
That's great. Thank you very much.
Thank you.
Meanwhile, Trump also says that his administration will impose tariffs on semiconductor imports from firms that do not shift production to the United States. He also described the duties as substantial but not that high. And he said that companies that are planning to build in America would be exempt. Well, that's all the time that we have for you on this edition of Startup Central. Thank you very much for tuning in. In fact, you can write to us at suc@etnow.tv to share your thoughts on what you like to watch on the show and your feedback about the show as well. Goodbye and thanks very much for staying tuned.